It's been a wild year, and with that, you have some opportunities to take advantage of before it's too late. With year-end approaching, we wanted to go over a few strategies that you can implement into your financial plans. My name's Tom Schiller.
I'm Eric Smith.
And we're here to provide you with some planning ideas that will help you and your family. Let's dive into tax planning first, as most of the strategies we're talking about today have a tax component to them. You might be curious about what changes have occurred in this past year. Well, there are a few that we need to touch on. The Inflation Reduction Act was just recently signed. This piece of legislation should not negatively impact most households. However, there are some tax credits that have been extended, mostly related to green energy and electric vehicle purchases. The biggest negative impact that you should be aware of is that some credits that were implemented or adjusted in 2021 to help families through the pandemic have expired. This list includes the Child Tax Credit, the Child and Dependent Care Credit, and the Earned Income Tax Credit. To avoid any big surprises, go through your 2021 return and determine which credits will no longer be applicable in 2022. As we move into other year-end strategies, it will be important to have a good understanding of your income levels. Review your year-to-date income and project out the rest of the year. This will give you a good sense of which tax bracket you fall into. Along with that, some strategies such as IRA contributions have income limits and phase-outs. Therefore, you'll need to review to determine which ones you're eligible for.
That's a great point, Tom. In addition to those specific tax planning strategies, year-end is always a great time to check in on the other aspects of your financial plan. Understanding where your portfolio is from a capital gains perspective, opportunities for Roth conversions, and confirming you're maximizing your retirement accounts such as IRAs and 401ks is a great idea each year. In addition to optimizing these specific strategies, it's always a great idea to revisit your comprehensive financial plan as well, especially during challenging market environments. This will help you keep a long-term perspective and provide peace of mind knowing that your plan can weather the storm.
That's a great point, Eric. The first half of 2022 was the worst start to a year since 1970 for portfolios. Nobody likes seeing their portfolio drop by a significant amount. However, this does happen from time to time, and it's important to stay disciplined to your investment strategy and take advantage of the current market conditions. Review your investment allocations and rebalance your portfolio. Some sectors of the market have outperformed others, therefore it's a great time to rebalance to your target allocations. Implementing this strategy and staying up to date is not an easy task for you do-it-yourselfers, but it's an important strategy as this will add return over time. Lastly, tax loss harvesting is a great way to reduce your current tax bill. But also, if you can accumulate enough losses, these will carry forward to future years and offset any gains.
Yes, and in addition to tax loss harvesting, year-end is a great time to revisit your estate planning and charitable intentions. While this has been a tough year for the markets, you may still have long-term positions or concentrated stock with significant gains that present an opportunity to maximize your charitable gifts. Ensuring that your charitable plan and estate plan are appropriately coordinated will help you take advantage of the right strategies for you, whether that be donor-advised fund or a qualified charitable distribution from your IRA that will ensure you have a continuing legacy of charitable giving. We hope these tips will help you as you prepare for the end of 2022. We would encourage you to work with your team of advisors to review any of the items we discussed. And as always, please do not hesitate to shoot us a note or reach out with a phone call to discuss your personal situation in greater detail.